Jasco Electronics headline earnings per share came in at 27% lower at 5 cents in the first half of the year. This due to a net negative headline earnings adjustment of 7.2 million rand. Revenue taking up, however, 12% to 552 million rand as the company's core businesses strengthened. Well, let's unpack the numbers now. We've got the group CEO, Pete Silva, standing by. Pete, thank you so much for joining us today. So talk to us about the restructuring plan and how it's going. Is it going according to plan?
Yes, it's a 3-year plan, and I've reported 3 half terms now, so we're halfway through. It's 18 months of our period. So I'm satisfied with some of the progress. In some one or two of the areas I'd like to be further ahead, but as you indicated, our core businesses are growing nicely, so I'm satisfied with that.
You've disposed of some non-performing assets, namely, for example, lighting structures. You've restructured telecom structures, and you're reviewing MTech. But talk to us about lighting structures, because that feeds into business from municipalities that you decided it wasn't worth sticking around for that.
That's right. Our structure business, you can either put a light on the top and put it on the highway, or you can put a GSM aerial on the top and it becomes an antenna or a GSM site. We've retained the telecom part, in other words, the GSM side of that business, but we've sold off the electrical part. Why did we do that? The business with municipalities is very erratic. Plus, maybe I have to commend them on that, is that they've gone the BEE small contractor route, and instead of getting orders placed on Jasco from the municipalities, that was already a concern. I'm actually getting it placed from very, very small contractors. So the reliability of orders, payment terms and viability of those entities worry us, and therefore we've decided to exit. It was a clean exit because we had an international partner. They're in that type of business, so they just bought out our shares.
Yeah, you did make a loss on that disposal of 4.4 million.
Yes, there always is, because you write down trade names and all that. So unfortunately that's the case, but it's a once-off disposal and we can look forward now.
Now, during the year you restructured all under the one Jasco brand. So you've got 3 verticals, as you call them now: information and communications technology, industry solutions, and energy solutions. Talk to us about the breakup in terms of revenue split between these 3 divisions.
ICT is by far the largest, run about 60 something percent, followed by industry at about 20 odd percent, and then energy being our smallest. Energy is the smallest, but that's where we see the big growth. We've seen telecommunications and ICT starting to saturate, but energy, there's a lot of deployment in terms of infrastructure required in South Africa and in Southern Africa.
So what is the focus there? Because margins there are higher than the rest of the business, improving to 12% overall. Your operating profit in the electrical manufacturing space, that is sitting slightly higher or higher, but it's still only 18% of overall revenue right now. So how are you planning to focus energy and focus investment in that part of the business?
Yeah, what we've invested is quite a bit. We're investing across the verticals. In ICT, the investment is still required, but it's around annuity business. So it's not just more boxes. Even though we sign new agency agreements to have a bigger value chain. Going to the energy, we're going to clean up a little bit more, because even in electrical manufacturers, we're doing a few little sub-activities that I'm not happy with. And if they do not meet my requirements going forward, we'll take them out and use that cash to build on more. Where do we see the growth in energy? We see it with the new generators of power, the independent power producers. And they're going to need a lot of help in terms of balance of plant, not necessarily on the wind structures or the PV, the photovoltaic panels.
Do you have the capacity to meet their requirements as it stands right now? Any contracts in place?
Yes, we have. We've avoided phase 1. We're starting to talk to the people in phase 2 and phase 3.
And we're talking about the renewable energy power purchase agreements, if I get that right.
That's correct.
Yeah,
yes, that's correct. So we're looking at that, and we tick all the boxes, because you're looking for local content. We are local. We are black-owned, majority black-owned, and we have the skills in-house for everything, except the turbine or the PV panel. Everybody needs to talk. Even if you're in a rural farm in the Northern Cape, you need communications. We do that. You need security. You need fiber. You need cable. We do all of that. So I think we're well positioned for that.
Let's go back to largest revenue generator, ICT Carrier Solutions, 48% of your consolidated revenue. Margins are slipping back there. What does that say about pricing power right now, given the fact that you do say that you've still managed? Are you dropping your prices to be able to increase market share, which you say you have done?
No, not at all. We've taken some of our margins and reinvested it in the annuity type business. You may recall we bought Arc Telecommunications a while ago, and that is a connectivity business of voice and data, and that's all around minutes. So we've been plowing a lot of money back in there, and that's why the margins are down. Otherwise, the margins would have been up.
So annuity business, I mean, how big is the annuity business right now? Are you seeing a tick up in that as a result of the strategy?
Yes, absolutely. The nice thing is in carriers, ICT carriers, of that volume, which is 48% of total revenue, 30% of that comes from annuity. And now the voice and data, which is a subset of that, is growing at 2-digit figures now.
What are the plans for industry solutions in 2013? Because that's the smallest part of the business as it stands right now.
Yeah, look, what's going to come into energy solutions in my future scope is energy management. You've seen NERSA, you've seen Eskom, you've seen the potential hikes in electricity. Energy management for corporates is going to be a big issue. As it was for connectivity, 10 years ago, 5 years ago, a lot of entities were going around trying to reduce their telco bill. That's going to happen in electricity. And we have that. We have the capacity in-house now to manage energies for big, large corporates and factories. And this is where we see the next growth.
And do you have contracts with the large corporates that you're targeting? Tell us about getting into the corporate and marketing to corporates, the solutions that you have.
Yeah, look, we have quite a few solutions now, and this is the added value that Jasco has. Because, for instance, you have a client that you're selling an ICT or a call center to. They need a security, they need a power solution, and we scope creep that type of business, or we get a bit bigger share of their wallet in terms of that.
But you're still in the restructuring phase right now, and you talk about still cleanup in the energy space, you talk about growing the annuity side of the business. There's a lot of opportunity, but I suppose shareholders really just want to see growing operating profit as opposed to declining operating profits. So what are your forecasts right now when it comes to earnings and profits and kind of giving investors hope there?
I always said right from the beginning I need a 3-year time frame, and we're halfway through that. So we are simplifying Jasco. Jasco used to be an alphabet soup of 20 to 30 little companies. We've put them all together, and we're simplifying that. I'm closing statutory businesses, that don't need. If they're superfluous, then they're superfluous, and we close them down. That saves us a lot of money in terms of statutory requirements. That will continue. The cost reduction will continue. We got a head office at 7,000 square meters. We were using 25% of that. Now we're up to nearly 50%, but there's still 50% that's not utilized. So we will be bringing in the subunits that have been distributed over the province into head office, and therefore make it a cohesive, efficient type unit. But it takes time.
And just very quickly, in terms of all this restructuring, you also got debt restructuring taking place right now. What's your target?
The target is to get the cheapest debt possible. And obviously to feed our engine, our organic growth that we need. Because the business is growing. You've seen the ICT growing at 25, industry revenue growing at 35, and we are funding that. So I just want to make sure that we got best-in-class deals with our partners out there so that we're not overpaying for our debt.